I'm Lynette Zang, Chief Market Analyst here at ITM Trading, a full-service physical gold and silver dealer specializing in custom strategies, which we should all have them under any circumstances, but never has it been more important that you know how you are going to sustain your standard of living, let alone put yourself in a position to actually come out the other side of this transition in a much better financial position than you were when you entered it. And there's a way. And I know a lot of people have bought gold and then they've been, and silver, and have been so disappointed because what they look at is Wall Street's spot market, which was created to manage your perception of the markets, and particularly when it comes to spot gold. Because spot gold, or gold rather, is the primary currency metal. Silver is the secondary currency metal. A rising spot price is an indication of a failing currency. And once you become crystal clear that the currency is failing, guess what? You make those choices to protect your wealth. Fiat money assets won't do it because you can only convert them back into fiat money. And if the fiat money has no value to it, and doesn't have very much at this point, if it has no value, well, last time I checked, a trillion times zero was still zero. So it has been requested that I do a little technical lesson. And so that's what we're going to do today, because you may or may not know that in my past, I was a banker and I was also a stockbroker. So I'm very familiar with those worlds, which is why I can translate this financial noise for you. So let me translate the financial noise for you. So we're going to be looking at some key patterns here. Cup formations, resistance, support, triple tops, and we're going to look at them in terms of spot gold and spot silver, which, even though suppressed, are still in a very quiet bull market. They don't want your attention on these. And we're going to start with spot gold, okay? Now, this graph goes back to like 2003. And you can see where we had a run up, and then we hit a level here. And once you hit a level and it pulls back, you have resistance. And that means that you have to break through that next level, which typically, once it does, that becomes support, right? So that means that if the price hits that, it's likely to bounce up. So on resistance, when it hits that number, it's more likely to bounce down, to move down the price action. And when it hits support, it's more likely to go up, okay? And this is just the spot market. So you can see we had a nice little run up, then we hit a resistance level again, it went down, it hit that support, and then we broke out. We made the highs in 2013 on the spot market, which is right here. And you can see that we broke that, but before we did that, you see that cup, right? A cup is not going to be smooth, but it kind of looks like the bottom of a cup, where you go from higher levels to lower levels and then back up again. This is key, because what a cup formation is, this is probably the most important pattern that I'm showing you, because it is an accumulation pattern. And what it tells you is that smart money, big money, has recognized an undervalued circumstance, and they are building a position quietly, because they don't want you to know about it, but they're building a position. When that cup comes to conclusion, and we get a breakout, then typically we're off to the races. Of course, we are at the end of this currency's life cycle. So let me come back to that in a minute, because I want to stay on the cup a little bit more. This is the pattern that we're going to be looking at to know when it's time to go back into real estate income producing assets. I don't care what it is, but income producing assets. I'm going to be looking for an accumulation pattern that's going to tell me when I am likely near a bottom. I mean, goodness gracious, if you ever get in at the very bottom or out at the very top, that's just luck. That's all that is. All I'm really looking to do is get in somewhere near a bottom and out somewhere near a top. Okay? But this accumulation pattern, so when it's time for us to shift from our gold, okay, it is and into income producing assets like commercial real estate or any real estate or rights, water rights, air rights, etc. When it's time to shift, this is the pattern that we're going to be looking for. It's not going to be smooth. We just kind of smooth it out with the computer, but we want that cup pattern because it tells us the smart money's been accumulating. And by the way, who's the smart money in this case? How about the central banks, right? They've been accumulating a ton of gold. Okay, so we had the breakout, and then because a rising gold price is an indication of a failing currency, they have to create a whole lot more gold that doesn't exist in order to try and control the price. Why isn't it down at 600, right? That shows you how much buying pressure there is. I will also point out to you the volume on the exchange and how that volume has grown over time, right? But they don't want you to think of gold as a safe haven. They're accumulating it. They just don't want you to, because they like your wealth in a system that's easy for them to steal, and you don't even realize that they're stealing it, right? Your wealth and your work. You know, look on that purchasing power chart, and it has gone down since the day you were born. You can buy less and less with the same amount of money. Not true on gold or silver. That's protected your purchasing power, and it will protect your purchasing power into the future. Okay, so here we went up, and it should have gone up more, but you know, they don't want you to see that. So we've got a top here. It's trying to break out. What I find really interesting about this pattern is that this line should have been support, and it wasn't quite, but you still didn't get as big a correction as you should have, considering this line did not stop a further decline below it. But this top line, this resistance line here, now you got a triple top. 1, 2, 3. And what you also have is, how do you know that this is in a bull market or a positive market? It's pretty simple. You have a series of higher and higher lows, because as long as you get higher and higher lows, you will get higher highs. It's the same thing with the purchasing power. How do you know it's in a negative trend? Because what you have are lower and lower highs. And if you keep getting lower and lower highs, guess what? You're going to end up with lower lows. So they just cover up the negative trend in the dollar's purchasing power, by pushing the stock market higher. And you go, oh my gosh, the stock market's going up. I don't want to miss out. Fear of missing out, FOMO. I don't want to miss out. But the reality is, it's a misdirection. Look over here, because what we're really doing is over here, and we don't want you to see this, okay? But again, a cup formation is a sign of smart money accumulation. So whenever you're going to make a choice, look for that pattern, right? Look for that pattern. You have to step back and look at a long term. That's why I'm not, and honestly, anything I'm telling you here also works in a trading environment. You just shorten everything up, but you can see the same kind of patterns. I'm just not a trader. That is not my thing. It makes me too stressed and nervous. And again, though, just keep these two factors in mind. Higher and higher lows indicate a positive trend, because if you keep getting higher lows, guarantee you, and I can't give you a lot of guarantees, but this one I can give you, if you consistently get higher and higher lows, you will get higher highs. So that indicates a positive trend. And again, that cup formation is an accumulation pattern of smart money. And you guys know, I do believe that you should always do for yourself what the smartest guys in the room are doing for themselves. And frankly, who knows more about what they're doing to the monetary system than the central banks? And what are they doing? They are buying more gold than they have since the last monetary system transition we went to.